Yeah, so we're up 4-1, and it definitely took more entries than I felt comfortable with, but knew that news was coming out, knew the profile was there, knew that that daily low was left open, so had to take that. Regardless, short that we talked about. So we started the week here, very exhaustive. Friday, we had that news where Powell came out pretty much saying the economy is going to be really rough, and there's going to be some policy changes, and there's going to be some uncomfortableness, right? So what does that uncomfortableness mean? It means that people are probably going to lose jobs, stock market's probably going to lose some gains. So right here, yesterday we talked about how first we didn't take a single trade on the indices, even though we identified a couple. We didn't take any because of that previous exhaustive day. We knew it was likely to consolidate, and it did that pretty well. So now remember, we look at liquidity points, and the earliest liquidity points we look at are going to be those right there, low of the week, high of the week, once we created more than one day, right? So now that we're on Tuesday, we can look at it in terms of a weekly range rather than just a daily range. So now we have low of the week, high of the week. Tuesday forms up or goes up and creates that high of the week. So what we want to see is in that creation of the high of the week, we want to see some stop huntness to it. We want to see them go up above it and then be not too eager to stay above that, right? They want to stay go up above it and then duck back under it real quick. Then you want to see a sell-off. We saw that. So now what probability are we likely at? We start off, we consolidate, we trade up, we hit liquidity, right? Previous daily high. That's all we need. We need a profile that goes up and hits liquidity. So right here, again, we have consolidation, and then it trades up. 1, 2, boom, hits liquidity, trades around there for a second, and then falls, sells off. Now we're looking at Asia and London, thinking, okay, Asia has low of the day, so there's money there. London has a low, so there's liquidity there. We would want to see them take London, retrace, take Asia, and then come back and consolidate back there where Asia's low of the day was, right? That's where you would expect them to expand. Let's see, again, take London, retrace, then take Asia, retrace, expand lower on the day, and then come back up toward wherever that raid was going on at. So let's compare this model to what actually happened today. So let's go down a little further. Let's just delete the model for now. It's coming in the way. So we see the previous daily high. It trades where Asia really sits. Then you get that first big push, breaks out of Asia. Then you get that second big push during London, breaks out of that daily high. And look, here's a quick retail death trap for you. You see how they get right next to that high? And they just leave that one little leg of support. That's generally a buy, but you would have wanted to be here in this gap going long. But that's just a cool little tip.